Ladies and gentlemen, welcome back to the channel. AMC stock is up 0.72% here on the day. We need to get into what is going on in the marketplace. What do you need to know? Because something is interesting that is happening today in our markets before tomorrow's CPI report. What do you need to know? Well, we're going to break it down here in this video. Hit that like button and subscribe to the channel if you guys have not done so already. It costs you free $99, absolutely nothing to do so, and spread this information to as many people as possible. So, first things first. AMC stock is up almost 1%, right at about $7 per share, technically $6.99 per share. We want to see AMC obviously above $7 per share. That's what we want to see. We're pretty close today. Who knows? By the end of the day today, we're probably going to see AMC stock well above $7 per share. If we do see that end of the day rally, in which it looks like we might. Now, what's actually happening today, if we take a look at the broader indexes here, the Russell is one of the underperformers, if you will. The Russell is up 0.03%, basically flat on the day today. The NASDAQ is another underperformer. The S&P 500 is up 0.17%, and the Dow is up 0.25%. So basically what you're seeing today is money is getting just a little bit nervous today. I don't really think it's due to the inflation report that we're going to get tomorrow. You actually seen China's inflation report that just came out, and wow, it was rough. If you take a look at China's CPI that just came out, this article says China's consumer prices fall fastest in 3 years. Factory gate deflation deepens. November CPI came in at negative 0.5% year over year. Get this. November CPI month over month came in at negative 0.5% as well. November PPI came in at negative 3%. So if this is any sign of what we might see to come for our CPI report coming out tomorrow, it's probably going to be a good report. That would just be my speculation. If China's seeing that much deflation, odds are the US is not seeing inflation ramping up again. So I actually don't think this rotation, if you will, of capital from interest rate sensitive names, that's really what it is, interest rate sensitive names, into like your industrials, right? Companies in the Dow. It's not based on CPI. It's based on Wednesday's Fed meeting. Now, if we actually take a look at this right here, I think this is pretty interesting. Nick Timmerhouse said today, he said Fed officials aren't likely to have a serious conversation about cuts this week, but the prospect of lower rates is coming into view. There are plenty of things that could cause them to say we're not in a rush to do this. So a little conflicting there to say, hey, they might start thinking about cutting rates, but there's nothing that says they're going to do them quickly. Markets are currently pricing in 4 rate cuts for 2024, with the first rate cut starting in May. So that's interesting, and just considering in the last 2 months, we've went from pricing in 1 or 2 rate cuts in 2024 to 4 or 5 rate cuts in 2024. As we get closer to either confirmation of this or rejection of this with the Fed on Wednesday and with the CPI report on Tuesday, it's not a big shocker that some money is kind of entering into opposite positions or trades that we have been seeing money going into. It's not a big surprise. So that is what is happening today. But I do think the CPI report tomorrow is going to come in light. So your CPI report tomorrow, the estimates are 0.3%, 0.3% for core inflation month over month. This probably comes in at 0.2%, maybe even 0.1%. So if we get a low CPI report tomorrow, especially for core month over month, I'm expecting a very positive rally in our markets. That would probably give the Fed enough confirmation to be in alignment with the markets. See, the real question is, coming on Wednesday, does the Fed think the Fed funds rate is going to be in line with where the markets are expecting by the end of 2024? So the markets right now are expecting the Fed funds rate will be about 4.25 to 4.5%. That would be about 1% of rate cuts for next year. Now, back in September of 2023, the Fed was pricing in 1, maybe 2 rate cuts. So this is double or triple what the Fed was pricing in just in September. Inflation has fallen a lot faster than expectations. That is true. But if the Fed does not confirm that view that the markets currently have, that could be a problem. And you can see right here, the Fed's fund rate projection for 2024 was 5.1%. So we're going to need to see the Fed funds rate projection on Wednesday come in at like 4.5% or lower, or stocks are probably not going to like that. This is the summary of economic projections that you are looking at right now, and you will get a new summary of economic projections on Wednesday. But for core inflation year over year tomorrow, I'm expecting around 3.8, 3.9%, could be even lower than that. Inflation rate month over month for your headline is expected at 0.1%. I wouldn't be surprised if that comes out at 0 again or 0.1%. That really wouldn't be a problem at all. 0.1% is fine. Even 0.2%, really not bad at all as well. Inflation rate year over year. This could be important as well for the algorithms. We're expecting 3.1% year over year. If you come in the 2s, that could be great news, and stocks might love that. So this is just a little bit of reaction before we actually get that data coming out tomorrow. Now, the latest AI investor sentiment survey that we do have shows the bears are, well, starting to grow out there. You recently went from 19.6% on November 29th, and that is bears here in red, to 27.4% bears as of December 6th. So you've definitely seen the bears grow. That's actually a good thing, all things considered. Even if you look at the VIX today, the VIX is up about 3%. So you are seeing some hedges heading into our markets today, which is I would say actually a pretty good sign. If some people are looking to hedge and there is some fear out there, it's not a total risk on day where just everything is soaring before CPI, right? That would set us up for maybe a fall coming tomorrow, even on a good CPI report. So I would say that's positive as of right now. Now, Citi sees a big year for stocks in 2024 with the S&P 500 finishing at 5,100. So that would also be, quite the upside from here. Now, a little bit more specific on AMC stock, expiring this week on December 15th. You do have about 17,000 calls currently in the money, 162,000 calls out the money. In the money puts at 16,605. Out the money puts 86,443. So you are seeing pretty much similar amounts of puts in the money and calls in the money, but about double, almost exactly, the amount of calls out the money than puts out the money. So definitely some very interesting numbers that we are seeing here, and very much skewed towards more call activity than put activity, and that's always a good thing to see. According to CNN, the Fear and Greed Index is at 68, so you are still in greedy territory, basically unchanged from last week as well. Now, taking a look here at the Ortex data, you do have short interest of free float at 9.9%, $135.67 million worth of short positions in AMC. Days to cover 0.93, 19.58 million shares that are currently sold short. Shares out on loan 10.53 million, cost to borrow 1.14%, utilization of 23.72%, and short score of 52.1 out of 100. So definitely seeing some interesting numbers there as well, kind of seeing some numbers falling, which I think that's quite the opposite of where the reality is of this situation. I think short interest is, hundreds of percents, right? So I'd take it with a big grain of salt when I see 9-10% short interest of free float. Now, if we go ahead and take a look at the options chain as well for the day today, you are seeing some impressive volume to the call side, 86.26%, volume to the put side of 13.74%. That is a put to call ratio of volume today at 0.16. That means there is like almost 8 times as many calls being bought today than puts. that's a pretty bullish sign as well. Now, taking a look at the interesting flow sentiment, you have seen 3 orders totaling $127,000 with a positive order value of 100%. You have seen a December 12th, 2024 $7 call worth $61,000 that was bought today. A December 15th $9 call, that would be by this Friday, for $13,000, and a December 22nd $750 call worth $53,000. So here is all of that. Now, like I said in the video that was put out yesterday, I think AMC stock could move big this week, depending on CPI tomorrow, but really depending on the Fed. If the Fed confirms that maybe we will get 4 or 5 rate cuts, and maybe they say, hey, we're not expecting a recession either, so you really want to watch the GDP estimate as well. GDP estimates rose from June through September, right? From 1.1% in June to 1.5% in September. If the rate cuts or the federal funds rate projection for tomorrow and by 2024, by December of 2024, come down to 4.5%, and GDP were to stay the same or even go down a little bit, but not signal a recession, well, that would be very good news. So we'll have to obviously see what does happen. But there's going to be a lot of money moving around. There's going to be a lot of bets being made here throughout the rest of the day today as well as tomorrow. CPI is very important, but this week is really just all about the Fed. Now, if we take a look at hedge fund and institutional options trades over the past week, the entirety of the week, you have seen 15 orders totaling $1 million with a positive order value of 68%. If all things go good this week, AMC stock could likely break out to the $9 range. If all things go south, you could easily see AMC stock at $5 per share. So big potential moves that we're looking at for the rest of this week. Hit that like button and subscribe to the channel. Let me know what you guys think about this information down below in the comments section. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.